Major U.S. averages traded mixed for much of the day as GE and Comcast shares popped. Now, Matt, the S&P 500 also briefly touched its highest level since late 2007. What are the catalysts that we need to really drive the markets higher at a sustained level?
Well, yesterday we thought we may have had it in the Dow when we closed above 14,000 for the first time in years. So that didn't take us higher. You know, we're seeing up 70, down 70, up 70, down 70. I don't know what the catalyst will be to take us higher. I'd be more worried about what it's going to take to get us a little bit lower. If we don't meet expectations, if the Fed ever backs away from the easy money supply, that could take us a little bit lower, and also the actions in Washington. You never know what's going to take. And I think everyone keeps talking about buying the dips. If the dip actually happens and we get a pullback of more than 1 or 2%, are people really going to be looking to re-enter the market? I'm not so sure. I think that would cause for a further slide.
And tomorrow we've got jobless claims numbers, which are expected to show a bit of improvement. But at this point, how much do fundamentals really matter?
Well, I'm not quite certain fundamentals matter anymore. I think after we get through earnings season, which we've gotten, fundamentals may not matter so much anymore. We'll focus more on technicals, where we have certain support levels and where we have certain resistance levels. You know, one fundamental thing that we talked about earlier was Netflix. You know, the stock was at $70 a share. They come out with good earnings. Stock goes to 185. So we kind of missed the boat there. So now how much of that is a technical move? How much of that is a fundamental move? I would think that there was a bit of a short squeeze on top of it. So more technical than fundamental, especially at this moment in the market.
And as you mentioned earlier, traders are, of course, watching Washington's actions very closely. If the sequestration deadline does take into effect, would that be a source of relief for you, or is that something that you're very nervous about?
Well, I don't want to say nervous in a good way or relief in a good way, because I'm not sure it's going to happen. We've seen the deadline approach now twice. We've seen no deal get done. You know, we've had 6 weeks to deal with it. We haven't. Now we're up against the deadline again. Are we just going to keep passing it along? That's what I would be worried of. And I think the market will probably show, if we see more declines on steady days like this, you know, we're down 60, down 60, down 60, and suddenly we're down 4 or 5%, that would indicate to me that the market is pretty nervous about what they expect out of Washington.
And what other catalysts are you looking out for this week?
One thing I would probably be looking at is the options expiration on Friday, and I think that generally provides a positive tone for the market. But now we're approaching such key levels, you know, 1525 in the S&P, 14,000 in the Dow. Some of these levels are going to take an enormous amount to get through, in my opinion. So I think, you know, we may not get as much gain as we usually get from the options expiration, but we should get some liquidity. People may want to sell into this liquidity. We're not seeing a whole lot of volume out there, so when there's not a lot of volume, you have to take advantage of any liquidity points.
Thanks, Matt. This is Andrea Say reporting for The Street.